Look, welcome to Terry's Tips, guys. I have a special edition for you today. So listen, get your notebooks, get your pen, because it's about to go down. So today, guys, we have a special guest, Rock Financial, and we're going to be talking about business credit, business funding, and everything you need to know to get financing for your business, guys. This video is for entrepreneurs, aspiring entrepreneurs, because you may have your side hustle incorporated and be making some money, small business owners and investors. And let me just tell you, one reason why I invited Rock Financial to kind of speak to you is because who better to get it than right from the source? And Rock Financial has honestly been a trusted partner. They're one of our preferred lenders, and they have helped so many of our clients. And so this video is to introduce you to Rock Financial, and then we're going to talk about funding, how you can get qualified, all of their updates, and then I'll have a link in my description and in my pinned comments. Make sure that you use that way you get priority processing. So without further ado, guys, welcome, Rock Financial. Can you give me your name and introduce yourself to our wealth warriors?
Absolutely. Absolutely. Terry, thank you so much for having us on today. I'm Tony Semino. I'm the VP of Business Development over here at Rock Financial. And basically what that means is my role is to work with people like Terry. Terry has an amazing network and a great reach, and ultimately a platform to share information. We don't do any direct to business owner marketing. You're not going to see us send you, checks in the mail or like a business credit card that's pre-approved. That's not our style. We don't send you 10,000 different emails. That's not how we spread the word. We do it in real situations like this and through networks like yours. So thank you so much for having us on. I know it's been a bit since we've gotten a chance to connect. So one of the beauties of commercial finance, or what we do and how we do it, is it's always changing. You and I could do this once a week and I would have some updates for you, but being that it's been a bit, I'm excited to share some of the new things that we have going on. Being that the economy's changing, the lenders change the way that they're looking at the economy. So there's definitely a lot to go through today. So like you mentioned, get out your notebooks, your pens, your pads. We're going to drop some knowledge today. That's for sure.
Yes, thank you so much. And let me tell you, so guys, nugget right here. And so for all my newbies, I drop nuggets to the entire video. For all my vets, you already know. And so I want to make sure that you guys are listening with intent, because one thing that he said already that's super important for you all to know is that financing, lending, guidelines, their products, it changes. So when you have questions, guys, don't look at videos from 6 months ago, a year ago. Go directly to the source. That way they can give you the current updated information. So there are people that watch, that are viewers out there that are from all different walks of life, and they're at different stages of business funding and business financing. So can you real quick kind of even explain what kind of lender you are and what a fintech lender is, and how that's different, like a traditional bank?
Absolutely. And just to even take a step back, right? Even before that, you mentioned the timing, right? I would tell you that timing is probably the biggest thing when it comes to borrowing money. And that's whether you're talking personal loans or business loans, right? Like, we're on the business side of things strictly. So that's all that we do. And I'll dive in there in a second. But even if you're talking about mortgages, right? Or a personal line of credit, like timing is everything. Rates change. How banks look at certain types of borrowers, it always changes based on where those rates are. So, your timing it's got to be impeccable. That's for sure. And just to kind of dive into who we are and what we do a little bit, like you mentioned, we are a fintech lender. What does that mean? Well, fintech is this fancy term that they've come up with for basically merging the technology industry with financial services. Right. So you might think of a company like QuickBooks, right? QuickBooks is probably like the top tier when it comes to fintech, or like the oldest company when it comes to fintech, because this is a brand new industry, right? You talk about education or medicine or law, those have been around for thousands and thousands of years. Fintech is like 15 years old. So it's brand new. And what does that mean? That means that there's a lot going on in a lot of different directions. So like I said, you have like a company like QuickBooks, right? They help companies keep track of all their financial statements, basically making sure that they're going through their taxes the right way, structuring things the right way, right? What we do specifically is we help with gaining access to funding for small businesses. And we do that outside of the bank, like Terry mentioned. So your best access for funding always is going to be going directly to your bank where you have a depository relationship. Why? Because that bank already knows you, they know your business, they know how much money you keep. Not only that, they're the source, right? Even if we give you capital, that capital comes from banks. This is going to sound crazy, right? But they say big banks don't like to lend to small businesses. And directly, you would be right. Big banks like to lend big lines of credit, right? So think about it. If you're Chase, you want to give money to Apple and Walmart, right? Not necessarily the local auto repair shop or beauty salon, or even an accountant, or somebody that might even have some things going on or know the financial game a little bit, right? You're just not their customer, right? So what they do is they partner with our lenders, and they'll give them $100 million line of credit, a $50 million line of credit. And that's how they'll kind of lend to small businesses. They'll let the lenders that we work with and the banks that we work with offer $50,000 and $100,000, loans and lines, right? So the way that it really works is you can go directly to your bank. Banks right now are approving between like 7 and 10% of borrowers, and even less are making it all the way through to the funding point, right? So most people, what that means is most people that go to their bank are not going to qualify. That's where we step in, right? So in terms of like some of the different types of lending that are out there, you basically can put it into two different buckets, right? Bucket one, you have asset-based, right? And that means you're going to borrow money to buy a piece of something, whether that's real estate, equipment. It could be any form of asset. Now, even intangible assets, right? Like what I mean by that is if you are a business that has accounts receivable or people that owe you money, that's work that you've already done. That's an asset for you. People will lend you money based on how much money you're owed. So asset-based or secured lending is kind of one side. And then on the other side, you have unsecured lending. And that's where it's not tied to any asset. And that's where you have like these term loans and lines of credit, and even the cash advance world. They all exist outside of asset-based products because they're more high risk. If you think about it, where a bank lends you money to buy a piece of real estate or a piece of equipment and you don't pay for that, they're coming to get that. That's how that works. If they gave you cash with no backing to that or no asset behind it, well, they're kind of SOL if you don't pay them back. Now, you definitely want to make sure you read your contracts, and they're going to have some things in there where, there might be a personal guarantee. So make sure you're definitely dotting your I's and crossing your T's, but they're not taking your house or that's not tied to those types of deals. So it makes it much more risky. Therefore, you typically see higher interest rates in those types of deals because, let's face it, it is riskier. Now, what makes it unique, right, is now we step into where our world is, and that's the business world. And rates work a little different. Programs work a little different than your typical, loan you might take out to, a HELOC, or a mortgage, right? Like those are much different types of loans when you're talking about your primary residence as an individual. When you talk about business loans, the idea is that the business is going to implement this and make money, right? So the two things that I want you to remember, if you don't remember anything else outside of this, is my timing right? And what am I doing with the money? Those two things right there will basically qualify you for funding by themselves. Like, I'm not even joking.
Listen, let me tell you something. Y'all, look, y'all out there, y'all know I say all the time. I say, have a good use for the money, guys, because our channel, we are a wealth building ministry. So it's about leveraging your personal and business credit to build wealth, not to get into debt. And so I always say to you guys, make sure that when you're getting funding, you're putting it into something that's going to bring you ROI, return on investment. So you have, number one, the money to pay the credit back, because business funding, business credit is not free. You guys, don't be deceived, right? Have a good use for it. Then you have a surplus. But more importantly, and one thing I want to kind of point out is that when you build that relationship with the lender and you pay it back responsibly, now you go back, you get more money and more money and more money. And each time, guys, the terms get a little bit better. You know, you get a little bit lower interest rate, you get a little bit more money. And so the takeaway for all of you out there too, especially people who have tried fintech financing, you're like, well, I don't really like the terms. I'm like, what's the alternative? Zero, look, $0.00, right? And so the point is to get your foot in the door, to build the relationship, have a wise use for the money, and then grow that relationship. And one other thing I want to say right here about the asset-based financing, that was good. Guys, but everybody's a business owner. You know, I always say everybody may not be a self-employed entrepreneur, but everybody is meant to build wealth. And so I know a lot of times my home healthcare companies and like my construction companies, those are examples, guys, of like assets-based where they have accounts receivable, invoices due from my home healthcare companies. Like they may have funding from the insurers, but they have to kind of float their payroll. That's a good use of their money. You know, my contractors, they have great big invoices, but they have to pay their construction team. That's a good use. So guys, for you guys out there, if you're unsure, ask the lender directly, get your information from the source. And so can you talk to us about some of the updates in your financing? What kind of financing do you have available? What are some of the new things you have to share with us?
So we recently went all in on the asset base. So it's funny that you pointed that out.
Was that right? Was that right about my?
Absolutely. You know, when it comes down to it, it's more about you know, what types of funding are out there and how does that make sense for what we're doing with the money, right? So if you are somebody that is a contractor, right, or your construction company, it might make sense to have that, you know, so that when you are owed money, you're able to take advantage of what's owed to you right now. The other thing that might make a lot of sense is not looking at tying up that asset and actually going out and getting just a line of credit based on your business's performance, because that isn't going to tie up an asset, which is also has value, right? Because you can only tie an asset up once, right? So if you're talking about like the SBA, or you're talking about like some of these different, you know, AR lines or factoring programs that are out there, they a lot of times file what's called a blanket lien. And what that means is they're going to say, hey, any asset that the business owns, we want to have rights to. Now, we're in the position where we work with a ton of different banks and lenders. And because of that, there's a lot of different things that we can do. So we will say to an accounts receivable lender, hey, you're only going to be able to hold accounts receivable here. And part of that reason is because we may be using equipment or real estate for a different type of deal going forward. So it's important that you don't take financing now that's going to harm you 6 months from now or a year from now, right? We always say, you know, financing's not an if, it's a when. And when you need it, think of rock. But no,
I like that.
the realness behind that is when you think of it, it's important that you know that, hey, I'm probably going to need money again in the future. So always kind of back your way into it, right? And say, okay, is what I'm taking now going to help me or hurt me in that long-term game plan that I'm trying to put together? You know, because let's face it, you know, everybody, like you were saying, is building wealth. They're moving forward, right? Our idea is not that we're here to move backwards. Right. Even if it's a lateral step, our idea is we're going to step laterally, then go forward, you know? Yeah. And there's no harm in borrowing money. There's harm in borrowing money that you don't have a plan to use. So make sure that you have a good plan, you put it in place, and let's face it, there's going to be hurdles, right? Like, you know, we've seen it, you know, time and time again, where somebody may come in and they're like, hey, I need $50,000 or $75,000. They're approved for up to $150,000. Right? They take their $75,000 and 30 days later they come back and they're like, hey, do you still have that other 75? Because, you know, something came up and I could really use that. Right. So again, I would say be smart, take advantage of what funding is available, when it's available, if it makes sense. Right. And then just know that in 30, 60 or 90 days, your terms are going to change. That's just the nature of the beast. The second you turn the month over in our industry, things change because they want to see an updated bank statement. They want to see updated cash flows. And if it turned a quarter, now they want to see updated financials. They want to see updated, you know, documents. So it's important that you understand that, you know, banks, lenders underwriting or underwriters, their job is to check boxes.
Yeah.
Right. And as a business owner, it's tough to understand what boxes you need to check for all the different lenders that are out there and all the different products that are out there. And that's kind of the service that we provide. If you come in and you don't really know what's available, or you don't know the difference between all these different products and services, or even the lenders that might offer the different products, that's fine. That's what we do. Our job is to leverage the relationships that we have with our lenders. It's really all about sharing information. We're going to take your information, break it down so that it makes sense to the lenders, right? Because we help tell that story for you. And this is actually something that, kind of goes back to your example a little bit before, right? Let's say you had a medical transportation company, right? Somebody that was working with you on the home healthcare side, right? And they're a medical transportation company.
Yeah.
If I told you that they wrote transportation on their application, the underwriter is going to see a truck driver.
Right.
If you write medical on that application, now all of a sudden they're going to see a doctor in a white coat.
Y'all, do not miss this nugget. You preaching right now. Go ahead.
This is one of those areas where we really help provide education. Now, it's not every time that you're going to be able to be a doctor in that scenario. If you are in medical transportation, it really depends on the lender, really, how you should tell that story. Because let's face it, some people like transportation companies and others just don't. Right. So, there's some of that in there where, you might, I don't want to say bend the rules, but you're certainly going to show the lender what they need to see, right, to make the right decision. You're not pulling a fast one. You're a medical transportation company. You're in both of those industries. You know what I mean? You got insurance companies paying you just like a doctor would. It's the same thing. So, definitely think about that when you're applying. Is, who's in my corner? Who am I applying with? Because even if you go with like one of our lenders directly, I've never met one of them that wasn't like, hey, we have the best deal here. Like every bank and lender thinks that they have the best options. That's one thing I learned being in this industry the last like 8 or 9 years, is even if they have less money at a higher rate on a shorter term, which is going to have a higher payment, they still think they have the better option.
Hey,
they
guys,
want to sell it. Go ahead.
So I'm going to plug one thing that he said. So for everybody out here, one of the takeaways, and you guys always hear me say looking good on paper. Sometimes you're getting denied because of what you put on the application. I preach that all the time. And so don't miss what he said. Sometimes you've done everything right and you cannot figure out why you keep on getting denied. And it's because you don't have that ally to help you tell the story. And so one of the reasons why I love Rock and why I'm actually, kind of introducing them to everybody out there is because their process. I'm going to ask you to explain the process, but when you very first initially kind of reach out to them, they're not like doing a hard credit pull and pulling you in front of a lender right then and there. You're having a conversation with somebody on their team first where he's able to ask you, you said your transportation, what do you do? And then that way they can help you paint that picture to give you put you in the best position for funding. And that's really what this is about. That's one reason why I like them. It's not just you applying and then you're just filling out something wrong and you keep on getting denied and you're frustrated. Like, no, you speak to a rep. We have a dedicated rep for our brand. That's that part of the partnership. They can speak to you, they can guide you as to the best way to look on paper and then put you in the position for funding. So can you explain to them, what is the process when somebody kind of reaches out to you? And please tell them, this is the part I love. How long does it take y'all to fund? Okay.
So this is a great question. And I'm so glad that you pointed it out, because I been in this industry forever. Some of the things that we do, I take for granted, if I'm being honest. And speed is one of them. I'm going to say this: we move at the pace of the borrower. Yeah. And I'm not joking when I'm telling you that we had a deal that funded yesterday for $130,000 for a company that applied. Today's Wednesday. Today's Tuesday. Mm-hmm. Yes. So they applied over the weekend because we only got the application in the morning. So we got there. It was like a web application. So it wasn't really like they didn't send us any documents, right? So they went through our entire process, which is what I'm about to tell you, in less than a business day. So they, like you said, they filled out some information online, right? And that's the same thing that's going to happen when they click your link. right? If you want, you can continue with the application process. It will let you fill out the application. It will even allow you to upload some bank statements and prompt you based on what you said, right? In that application, it will tell you, hey, this is what you need to send us. But then what's going to happen, like Terry said, is it's going to hit a person. We believe in people, working with people. And by adding technology to that, now you have smart people working with technology. It makes for an efficient process, and that's what we have. So our process is basically 10 stages. Stage one is prospecting. That's where you're going to connect with us. We're going to have that conversation. You're going to start to gather some information, some documentation, right? Our typical package that we look for is like 3 to 6 months of bank statements and a signed application. Sometimes you need a tax return in there. If, there's a question about ownership, or they want to just show cash flow for the year, or that you've been in business longer than a year. Sometimes it's just as simple as, hey, here's an extra document, right? But that's typically all you're going to need, outside of like if you were buying an equipment, that we would require like a quote for the piece of equipment. Or if you had a piece of real estate, we would need the address for that real estate and to go through the proper channels, right? But as far as like just getting cash in your hand as a business owner, it's just bank statements, an application, and potentially a tax return. Once you get that to us, we're typically anywhere, we always say like 12 to 24 hours for an initial approval. But we literally, because of APIs and the way technology works, we start getting approvals and declines instantly. I would say, like, if you're one of those borrowers who has to borrow same day, like this gentleman yesterday, we would tell you 2 hours at the most, because that just gives us the ability to go back and forth and tell your story to the lenders. Because a lot of times it's all automated. You know what I mean? We don't have the chance to tell the story until they've spit out an automated offer or they've declined you once, Our team, though, then takes over, right? And we, on your behalf, go have a conversation with your dedicated underwriter, who's working that deal. And what's unique about us is we always, based on what you're looking for, go to the best like 3 to 5 lenders, and make them compete for your business, right? Because sometimes you end up with a term from one lender that's a little bit longer than the other lender, but this lender has more money over here, right? So what we do is we tell them, hey, lender over here, you have a better rate, but not as much money. Or lender over here, you don't have as good of rate, but you have more money, right? So what ends up happening is they compete for your business and you end up with a blended offer. And what's unique about our offer process is you're going to be able to play with the numbers yourself. So every time you get an offer from us, it comes through this unique calculator feature where you can play with all of your offers. So even you don't know this, but it could be 3 or 4 different lenders' offers that you're looking at. But all that it is you playing with a slider that says, hey, I'm approved up to $250,000. And then you saying how much money you want to take, and it telling you, hey, these are your terms based on that. This is what your payment would be. This is how many months your payments are, right? And it goes into the whole process. If right there you say, hey, I'm all good with those terms, it's going to prompt you to upload a voided check for your checking account so we can deposit the funds, a driver's license to prove that you are who you are. Yeah. And it's pretty seamless from there on out. Sometimes they have like an online portal that you log into to pull the funds. Sometimes they have like an electronic agreement that you sign. Sometimes they do like a verification call. There's usually like 1 or 2 things at the end of the very process, but front to back, it could be as little as 12 to 24 hours. Yeah. I would tell you our typical funding process is 3 to 5 business days. And that's somebody who took their time, wasn't in a rush, but just was able to get us documentation and make a decision for themselves. And the one thing that I just want to mention really quick is don't be afraid to tell us no. Timing does change these things, right? So plenty of times, and it's already happened with your network, Terry, where, there's been people where, the initial offer wasn't what they needed, right? Or 30 days happened and things did change, or maybe they didn't change, right? Sometimes it's about, hey, things haven't changed for me yet, so I need to borrow that money, so maybe they will change, right? So sometimes it's a little longer on the cycle because you just have that timing factor. But I just want you to know, like, we don't hard sell anything. It's, hey, you're approved for up to this much. How much do you need? It's doesn't matter to us what program or product you take. Like I said, we believe financing is not an if, it's a when.
Come on, somebody. And so let me ask you real quick with that, and then we'll get ready to wrap up. And so first, for everybody out there, if you enjoy videos like this, because we could honestly talk for hours and hours and hours, right? And so we'll definitely have Rock on again. But if you enjoy videos like this, put in the comments yes, and I'll make sure that we invite them back to kind of continue this conversation. But let me ask you, so are you, when somebody's initially, they saw this video, they want to apply for funding, they have a need, they click on the link. At that point, when they're clicking on the link to fill out their initial application, is that a hard inquiry right then and there on their personal credit report? Please tell the people.
So no, there is not a hard inquiry. You'll never see a hard inquiry from Rock Financial. Based on your product and going to funding, sometimes there is a hard pull, right? So I want to just throw the disclaimer out there, like an SBA loan, 100% you're going to see a hard pull on your credit. It's not from us, it's from the bank, because only banks do SBA loans. As far as like equipment finance, if you're brand new, right? If you are a startup business, you can get equipment finance, right? And I'll touch on this a little bit more in depth after I say this, but as far as like a true startup, you got no money coming into your checking account just yet as far as revenue goes, you can go out and get a pizza oven or a lift for your auto repair shop or whatever it is. And basically that will have a hard pull on your credit because you are brand new.
That's good.
But that's really the two situations that we see a hard pull the most. The only other time that would really happen is if there's like a question on the credit. And that would be something you would have a disclaimer of, and it would never be on the upfront. Like when you apply with us, there's never going to be a hard pull.
That's good. And so guys, don't miss what he said. And so, and I preach about this all the time, especially with this kind of financing, that, the benefit of having that conversation in advance is right there, just filling out and speaking to somebody. There's not a hard inquiry. And if there is a potential of having one, they're going to communicate that with you. Now, what I want to say to you all out there is do not be scared of a hard inquiry, right? Excessive inquiries are what's negative. But if I'm a business owner and I'm about to get $50,000 for some equipment I need to grow my business, and they're telling me it's a hard inquiry, guess what, y'all? Look, I don't play with you. That's a good use of a hard inquiry. I'm not scared of a hard inquiry that results in funding I need to grow. The only time I don't like hard inquiries is that if it doesn't result in anything I need to build. So you're going to have some kind of dialogue there to kind of know, okay, this is iffy, or they need this. You're going to have some dialogue in advance as opposed to just having a bunch of excessive hard inquiries. So don't miss that.
And it's a great point that you brought up, because even if you are looking at like an SBA loan, it's very difficult to qualify for. It's like you have the bank, right? Like I told you, the bank only does like 5 or 6% of their deals right now. The SBA is like 1A behind the bank, right? They are, if you could imagine this, you took the banks and the government and made them build a loan. That's what the SBA is. So you have to be bankable, and you have to be okay with the government. So you're jumping through a lot of hoops. They make you send a lot of documentation. The least of your trouble with that is going to end up being that hard pull on your credit, if I'm being honest. Like a lot of times where we have people disqualify for that is just that they haven't kept up on their financial statements for the past few years, and to get caught up on all that stuff could be a nightmare, especially if you weren't profitable anyway. You got to be profitable for at least 2 years. So like the SBA is hard enough to qualify for. I would say worry about that one when you get there. But like you said, when you're talking about some of these programs that are actually going to pull hard on your credit, you're talking about 50, 100,000. We're talking about an SBA deal. A lot of those are 350 plus, so you could be talking about, a few $1 million on an SBA deal, I don't know. A lot of times those opportunities outweigh the cost of, 7 to 10 points on your credit for a credit pull. You know what I mean?
I love it. And so can you give us guys, so Rock Financial, they have actually already partnered with us for a while, and they have funded a lot of our clients. our wealth warriors, people in our coaching. So do you have, can you like highlight maybe like an example of somebody who has gotten funding already and what that journey looked like? And then we'll wrap up with some kind of closing remarks, and then I'll make sure I share their information with you guys. So
No, absolutely. And I'm glad you pointed this out, because even before I jumped on, I had a chance to kind of look back through everything. And what really astonished me was how many people took multiple types of funding. So we've had a few people take funding, a good handful, but what I noticed was a lot of them were taking a line of credit and a loan, or a line of credit and equipment financing, and kind of using the whole platform to their advantage. And that's what I thought was super interesting was, when you have a relationship like one with us, I believe there's power in the resources that we provide, right? So to see your network using them, to me, was like, oh, okay, I love that, because a lot of times people don't realize, like, hey, is there an opportunity for me to take a loan now, which will help keep my payment down, right? But then have access to a line of credit so that it gives me the flexibility long term, right? That same example I gave earlier, where somebody borrowed 75,000 and was looking for the additional 75. If they took both of those products, they could have had a $75,000 loan and potentially a $75,000 line that they could draw on as needed. And that's what makes us unique. And I think your network unique is that, hey, when we have a game plan here and we can align those things, it's happening strategically and very strong. So kudos to the people in your network that have already borrowed from us. I noticed a few different industries, I don't want to say no rhyme or reason, but like no real tendencies just yet as far as the borrowers go, casting a wide net. So like we have no industry restrictions, technically no minimum FICO score. Like, you can apply with us as long as you have a business checking account, because that's what we do. We fund business checking accounts. And if you're looking for capital, like cash in your business, we just require that you have at least $5,000 per month in revenue going through that checking account, because that's what's going to tell us how much you can afford. So that's pretty much us in a nutshell, and even our relationship. You have people taking advantage of small amounts. I know we had one extremely large deal, I think over $500,000. So, there's definitely, I saw one, I think like 12 or 15 grand, one as high as like 600,000. So there's a lot going on in your network, and our reach has only extended. Like I said, if you have somebody that's looking for more of like an asset-based loan, or even to do something with like commercial real estate or fix and flip, and they have some experience, like, where your go-to for funding, whether it's residential investment or, a business looking to buy equipment, doesn't matter to us. We're here to help. And that's the real goal, is to provide you information. Borrowers are going to borrow, and we're here when they need us. So, I just want to say thank you again for having us on and letting us chat, because, I know that this information is powerful, but your network can make it work. And that's even more powerful. So, again, thank you.
Thank you so much, guys. I just love them. And let me tell you, we because of the confidentiality, I didn't want to say any businesses' names, but I actually know them. But we've had newer entrepreneurs borrow like 10, 15,000, and we even had somebody borrow over 600, was about 600,000. So guys, the takeaway to you all, right? You are an entrepreneur, you're a small business owner, you're an investor. You need some help. Number one, have a plan. Number two, know how much you want. Number three, have the conversation. They're either going to say yes or they're going to say no. And one thing about having a contact, right, and having priority processing is that if they say no, they'll give you some feedback. So that means, okay, my bank statements weren't right, or I might need my credit, or I might have to do something else. Guys, take that feedback, do the work, and then come back. It's not that deep, because at the end of the day, your blood, sweat, and tears has gone into growing your business. So don't let a not right now be the thing that makes you get discouraged. That means go ahead and do some things, and delayed but never denied. Come on, somebody, right? You can still get the funding. And so And one thing I hope that you guys pointed out, and then I'll just ask if you have any just like last tips for everybody out there watching, is that they have different types of funding, right? Lines of credit, term loans, equipment financing. He mentioned real estate. I already know we've done, waste management, transportation, medical, investors. All of you out there have so many different things that you're using as your gift to help. So don't think in your mind, well, I don't qualify, or I may need one thing. No, you have multiple options there. So before we go, is there any kind of last tips you have out there for anybody who's thinking about financing or who wants to, come to you all with financing?
Absolutely. My last tip is don't wait for bad times.
Come
A
on,
lot of
somebody.
yeah, a lot of times people borrow money when they need it. And what happens there is you may not qualify for as much as if you didn't necessarily need it. Now, I know that that sounds funny, right? But what I mean by that is, don't wait for the rainy day to take advantage of that opportunity. Don't wait until your back's against the wall to really fight back. Know that like even seasonal businesses, right? Like a lot of times you're a seasonal business, you may have a slower season. Well, it's better to borrow at the end of your hot season going into the off season than it is to borrow at the end of your off season. That's just the nature of the beast. So now there's some programs out there that'll help you offset some of that seasonality. And, again, it's about who you know and who you apply with. But what the main thing that I want you to know is I once heard from a banker that banks give out umbrellas when the sun is shining, right? Now, what I took away from that though is sometimes it's really hot out and you still need that umbrella, So, you probably should put some focus there. Try to borrow money when it makes sense for you. And I always say dollars make sense, right? So if you could make money with the money, take advantage of that because it might not be available in 30 days. You never know.
I love it. Thank you. For everybody out there, I hope that was helpful. You're hearing directly from the lender. And the biggest takeaway is you have options. So instead of guessing, reach out and get your questions answered by an expert who can actually fund you. Okay. Look, got it good. And so thank you so much. I will put the link for Rock Financial in the description and in the pinned comments. And I will see you next week. Bye, y'all.